Welcome back. In this lesson, we're going to learn about how to set you up. So we're going to cover everything you need, right from websites you should visit, charting softwares, and even how to set up your brokerage account. Now, one of the first decisions you'll make before you trade and invest is to get your trading software where you place your orders in. For that, you need a brokerage account. So let's understand the two types. That's the offline and the discount broker. I'm sure you've noticed that more people are buying things online. Your friends and family probably buy shoes, clothes, and even watches over the web. If 10 years ago you went to your parents and told them that you're buying a watch online which will be delivered at your doorstep in 2 days, they would have thought you're crazy. But we live in 2015 and buying things online is very normal. But we can also buy that watch offline in a real store. Why do we choose to buy online then? One reason could be that the e-commerce company is selling it for cheaper. That's a good reason to shop online. Another reason could be convenience. You get your item delivered to you right at your doorstep. So, why are we talking about e-commerce and the boom that's happening? And how does it relate to the brokerage industry? The analogy is this. Online shopping versus shopping malls is akin to discount brokers versus offline brokers. Let me explain. So offline brokers have hundreds, if not thousands, of branches all over the country. Now, this made sense. This made sense 10 years ago when there was no internet. It made sense to have so many branches. It made sense for people to go to these branches, meet the relationship manager, understand the software, and finally start to trade. But now it's not required. With the internet, everything can be done online. Discount brokers are just that. Everything is over the web, and all these savings are passed on to us, to the traders, to the investors. There's a big cost difference between offline and discount brokers. And discount brokers can now focus on only two main things: excellent customer service and excellent software. Now, I think it's important to understand what the brokerage model is and how it's calculated. You see, for traders, every trade has a brokerage cost, and we need to know exactly what that is. I'm going to show you with this brokerage calculator. This is a brokerage calculator and will make things much easier to show. So I'm going to add NSE Equities Reliance, change this quantity to 2000. You'll notice there are two trades here, a buy side and a sell side, and the turnover is 36 lakhs. Now this is the most important part. You'll notice the brokerage is 40 rupees. There are two orders, so each order cost us 20 rupees each. And then you have other charges. Now these are standard, so whichever broker you go with, they will always be there. But I want to focus on just this, the brokerage part. You charge 20 rupees per order if you go with a discount broker, regardless of trade size. So whether you trade with 1 lakh, a few thousand rupees, 10 lakhs or 1 crore, you'll always be charged 20 rupees per order. When we are trading, this is an essential part of money management. Managing risk is a huge part of your methodology, so you need to know costs. So whichever broker you go with, make sure you know exactly how much per trade is costing you and what your break-even is. Traditional offline brokers, instead of charging you a flat fee like we just saw, they will charge you a percentage. So if your trading business actually grew in size, their brokerage take would increase. Now, let's suppose the same example where we paid 40 rupees brokerage, the traditional broker charges you 0.02%. That would come out to be 720 rupees. 720 compared with 40. It is a huge difference. Added to that, you have other costs as well. Just by using a discount broker, you were able to save 95%. But don't take my word for it. Go online, do your research, use brokerage calculators all over the web, and make your decision. Now, oftentimes, offline brokers will offer an advisory service to their clients, meaning the advisory service would tell them at what point to buy or sell stocks. These tips are given to the clients directly. Now, let me draw a parallel for you. Suppose you're looking to buy airline tickets. Suppose you want to go to Goa, for example, and you deal with an airline company directly. The person you're talking to is a representative and an employee of that airline, and he offers you a price ticket. He also claims that he's giving you the best price possible, and he also gets a commission for every sale he makes, which is obvious. On the other side, you find an independent agent who says that he will get you the best deal possible. He's not employed by any airline. His job to get customers is to find the best deal possible. That's how his business runs. Now, who do you think you would trust more? It's obvious, right? You would trust the independent agent because he has no bias. Now, very similarly, offline brokers will offer an advisory service. So, the relationship manager would call the client and offer to tell him tips, buying and selling tips on stocks. Now, we would advise you to not take these tips. At Trade Academy, our objective is exactly the opposite. We want to make you an objective trader, a self-reliant trader who follows his own research, does his own due diligence, and is responsible for his own trades. You will have a methodology, risk management, and everything ready so you can make an informed decision. Here's a quick checklist you can use to find a broker. 1. Stay away from any brokers claiming to provide excellent returns on investment. That's not their job. Their job is to be a transparent middleman between you and the exchange. Number 2, transparency. It's very important to know how much the cost structure is. Unfortunately, many brokers get away with charging things that you didn't know, hidden charges. Make sure you know the costs. Number 3, nseindia.com. Use this website to find out complaints against brokers. Your money is going to be parked with the broker. Make sure he has a clean record. And number 4, do not underestimate things like placing orders online or calling on the phone. You need excellent customer service. So by now, you've probably selected your broker. Great, time to open your account. It's very simple. In a nutshell, you'll have some documents, you'll sign them and send them across. After this, there will be an in-person verification called IPV. This is basically to know that you are the person who's trading or not. And after this, you'll get your trading software set up. This will be supplied by your broker. It's usually free, and they will take the remote of your computer, install it, and teach you how to use it. Once you're comfortable, you're ready, set, go. We're going to next talk about margin money. Now, as new traders, margin money sounds like a fascinating, magical thing. Basically, it means leverage. So, if you have, say, your broker tell you that he can offer you 10:1 margin, that means if you have 1 lakh in the account, you can trade with 10 lakh rupees worth of shares. Isn't that amazing? A small movement can now earn you a big surprise. But that surprise could actually be a loss as well. You see, because you have leverage on, your losses could and will be magnified. Now, new traders usually overextend themselves, leverage themselves. Most of them don't have no clue of what risk management is. They don't have methodology, let alone a stop loss. So if you're beginning out, at Trade Academy, we recommend one thing. Never use margin, especially if you're new. Start with a few thousand rupees. You can trade with that amount. When you see the profits come in, you can slowly scale that up. So for now, say no to margin. To set yourself up with a computer to actually trade, you don't need to be testosterone-filled, crazy, caffeine-eating junkie like the impression of Wall Streeters. You don't need 20 different screens to trade or even 3 screens to trade. All you need is the average computer. When you look at the biggest investors of all time, you notice one thing, and that is simplicity. One computer with a reliable internet connection and software is all you need. Now, we all know that the stock market is dynamic. News is coming in, coming out, and affecting stock on a daily basis. Now, not only do you need that in a timely manner, but you also need it to be credible. So we have a list here. The next time Tata Motors is coming with a big announcement of expanding somewhere, which affects the price, or there's a budget announcement, or you need to know if Asian Paints results are out or not, these are some of the websites you can refer to. Now this is my favorite part. I think Everyone should always be open to new ideas and keep learning. Always be open to at least these books. These are some of the timeless books most people recommend. Some of them are my favorites. Have a look. Charting. Now, there are a lot of options out there for making charts. Some are online, some have to be downloaded, and some are direct feeds. Some of them are paid and some of them are free. Now, just remember, if you want real-time data, that will usually always cost you. But if you want end-of-day charts, that is the daily charts, they will always be free. So, here are some of the places you can get charting at. Since we've now set you up, let's explore something else. You still need to decide whether you want to use charts to make your trading decisions or macroeconomic and financial data, fundamental analysis. This decision between technical and fundamental analysis will come with time. I would recommend learn both and use what works with you. Now, let's see the styles of famous legendary traders. Benjamin Graham, the father of value investing. Graham is famous for being Warren Buffett's inspiration. His classic book and widely considered as the Bible on the basics of investing can be found in the 1934 classic Security Analysis. His most popular book and still widely used today is The Intelligent Investor, published way back in 1949. Regardless of what methodology you pursue, this is a must-read book for all investors and traders. Rakesh Jhunjhunwala, Value Investor. Jhunjhunwala is a living legend, widely regarded as the most prominent and well-known investor in India. Jhunjhunwala follows and continues to follow most basic value investing principles. His investment philosophies are more aligned to trend followers such as George Soros than a long-time value investor, Buffett. Jhunjhunwala is a big believer in investing in companies with a solid backbone of entrepreneurs with a clear vision in mind. Warren Buffett. Known as the Oracle of Omaha, Buffett is widely regarded as the greatest investor of all time. With a staggering net worth of 50 billion USD, the simplicity of his decision making is what makes him so endearing. He does not simply buy shares, his decisions are based on the premise that he will forever own a company, thereby breaking any thoughts of short-term gains. Buffett has influenced millions of value investors around the world. Swing trader legend Paul Tudor Jones. He is famous for shorting Black Monday crash and netting millions of dollars. Trading since 1976, Paul Tudor Jones was seen in the famous movie Trader, where he candidly talks about an impending crash based on stock charts. He used data to statistically analyze the probability of a crash, and he was right. Today, he manages a hedge fund and uses a mix of top-down macroeconomics and price charts. He was one of the highest earning managers in 2013 and has a net worth of $4 billion. This is the last video in the course. We shattered misconceptions, went on a journey with Raj's Sweets, learned about stock exchanges, and even set you up to choose a broker and what websites you can reference. But this is just the start. Now you're going to explore in courses ahead technical analysis in full detail with a method and even fundamental analysis. Equip yourself with both. Join us in those courses ahead. I'll see you then.